under the 45 in a bear trend. So at this point, we're basically in a bear trend looking for rallies to short and looking to cover near our target areas. When we finally get down to our primary target, we'd be watching very early on for a buy signal down in this area. You may not take it yet, though, because you're still under the 45 off the top, but you could certainly take it crossing the 45 because you already had theoretically a buy signal in place here, and this would reiterate it on a big momentum move up through your first target here, and then it would be a question whether or not you took a little scalp here and got stopped out over in this area. And ultimately we see the 45 goes all the way down and crosses our target. And so this is a kind of a square route that the 45 coming down, hitting one of our primary targets, signals an area in time where there could be a major advance, and we've identified the low in this area, and we put our 45 back on again, and then the market continues to trade higher. Now, the last trading example is using an intraday 60-minute chart. Let's turn our attention for a minute to a daily pattern and see if there's any variations that we have to make to our practice here. The first thing we do is we could find after an uptrend, we do see our signal reversal bar, but it's a little tiny thing. So it's very hard to turn that thing sideways and try and come up with an angle. So in cases like this, if you recall, I use the offset angle method. And the strongest offset angle is the 90-degree one. So I'll take the axis of the final rush up to the last top. Now you could put a 45 on here, but the 45 probably comes straight down here, so you can't use it. But I would overlay my little plastic triangle and use a 90-degree, or sometimes I've even used an envelope, because any square object you have, a book or whatever, put it on. This will give you a good approximation of the long-term bearish trend that's going to be active in that chart. And we can see that they are starting to respect it right off the bat. And somewhere in here, you're going to be short anyway with a trailing stop. Now we can see right off the bat that the high each day is lower and lower, and there's barely any overlap. So there's no question the trend is down. Even when you get a potential little signal reversal bar, it barely gets to the midpoint of that bar the day before. And then recall we were just using the bar immediately before the signal reversal bar, that low on an uptrend or that high on a downtrend as our stop out point. Then we have a double top, lower top, so it's classic lower lows, lower highs. Once we get into the move a little bit, though, we can start to figure out what kind of patterns we want to use for our angles, and we want to put our targets on also. So as we get down into here, the first thing we want to do is, where is this thing going? It's easy to short. I'm already short with a trailing stop of 2 or 3 bars back. And if it's a big mover like a Google here that could move $20 or $30, you may only be able to, because of your 1 or 2 or 3% capital rule as a risk, you may only have to use the high of the preceding day as a stop and not do 2 or 3 bars back. So we got to find out where we could go. So let's do our idea of putting on some targets. So we could take the that first little width of the bar and double it again, but we see we're going to need probably some more room. This is such a big mover. So often what I'll do when I can't really stretch my bars, too big, you could do something like this. Use the 1/8 at the end of that first bar. But what I'll do, let me go back here for a second. If we find out that our first 1/8 is right the width of the bar, and this is a double, if I find out that one of the other bars is exactly on one of my key doubles or quadruples, like this 50% one, then I can use this low right here as a potential bar to set the scale to. So now I'll move my 1/8 increment down to that low. And then I will get a much bigger range that may be more appropriate. So now I'll have a little resistance area in here, and then the big one of the major areas that will be a double and a quadruple from that bar down in here, and then I'll have some more over in here. So these could be my initial targets that I want to use now to forecast where I could be going and where I may want to cover some shorts if I should get like a signal reversal bar down in here. It looks like they're starting to base. I may get a signal reversal bar. Now, of course, we're short now, so this does not mean we're going long just because we see a signal reversal bar. This is a steep angular move, and even if you just drew an arbitrary angle, like many traders do, perhaps that's why they had a little rally here. But this is no reason to go long a stock that's coming down in a very steep angular momentum. This is a stock made for shorting, and it's just a question now of where we really want to put on the appropriate angles to see how far it can rally. So what we should do at this point is try and get some scaled angles, because a proper angle will tell you a lot more about the direction of the market, what's going to happen. So if we remember before, what I'd like to do is set up the first little swing low to a 4x1 angle. And this low right here is where we actually had a signal reversal bar. It didn't amount to much, but it was a legitimate intra-day signal reversal bar. So I'll set that up to a 4x1 angle by moving over my first little quadrant and down the 4 units right here. And then I can find out that this overall square should be my true 45 on this daily chart. That true 45 comes down here and looks like it's probably working. I don't know if it hit here theoretically or here. I'm probably off by a little bit, but it came out close to here. Let's see if the other angles tie in so far. This angle would be right in here too. So it seems like I'm a little off. I think it should be backed up just a tiny bit in these, but it's not going to make much difference for demonstration purposes. So this would be our 2x1 angle, and that's why we broke out of the 2x1 and we rallied up to the 1x1. And when they exploded through this, at least it was a sign that you were going to get a much bigger rally, and the rally might very well go up to your signal reversal bar over here, which is the resistance area. And it did fail and gave another sell and fell back below our 90-degree quadrant, which is still fairly bearish. Note, by the way, that when you put your true angles on for the scaling of the chart, notice how I put this 2x1 through the corner of the square, but it neatly caught these tops, showing us that it does work. And when it comes down and it intersects our target price, we can expect turning points. And when we notice our other angle comes down, intersects target prices, we're having this area somewhere right in here as a target. So when you start to see harmonic timing turns where your angles are hitting various target areas, you know that that's a legitimate angle to use. Also, now that I'm fairly convinced that I have some true angles on here, what I might do is really get rid of this 90-degree offset line I put on, because that's an offset to the previous move, and while it does show resistance, it's not exactly coordinated with the time and price structure of this leg down. So now I can draw some other angles on here to probably get a better fit. You know, we could have an angle down through here, which seems to work, but the midpoint of the square comes out right over here at this half. So we see too that it is respecting this on the rally. It comes up and we're at a target zone anyway, so once it got through this level, it was theoretically in an uptrend, and you could have gone long here because you did have a substantial base. So you could have gone long here with a trailing stop, look for some kind of resistance at this angle and at the support. Unfortunately, this stock has a habit of big gaps, so you wouldn't have known about this being the high of the low bar until the next day. But you would have to liquidate if you were long, especially from down in here, somewhere over in here. And then it did come down and try and test this area one more time. You get another little signal reversal bar in here. It tests the angle. So basically, it's an area where you're going to get chopped up because you see bars are basically the same range every day. If you find that the market's making a series of 3 or 4 or 5 days at the same level, it's really not a trading environment. It's a consolidation. It's either a base or a top. And you really want to keep your trading to the steep angle moves. Like in here, it might be an 8x1 angle. after we break down here, we have a steep 2 or 4 by 1 angle, just like we did over here when we have a steep 2 by 1 angle from the next top. Now what we could also do is we could take this same angle over here and duplicate it, for instance, by just making a parallel to it. So let's say I'm going to use this steep angle again. So I just make a parallel to that and put that one over here. And so now as we break down over here, I can suspect that this was our first leg down. They rallied back almost to the midpoint. If I put on a retracement here, this I can eyeball it. It's probably close to a 50% retracement. Then this would probably be our second leg down. And as this angle takes hold, as it intersects our target area down here, they'll probably try and base one more time. And if we can then start to break out of these other angles, we may finally be able to turn this pattern into some kind of an uptrend. Now, up until now in this video, I've emphasized trading skills, the ability for you to recognize a reversal bar, make a buy or sell, do some calculations of projected targets, possible stop out points and reversals. And I haven't covered time cycles very much because I've written extensively about them in my other books, and that really falls into the category of forecasting, which is quite different than trading. Forecasting is utilized more in terms of strategy. When you can pinpoint the exact cyclical turning point date, then you can use some strategies, and especially you can double up with a lot of leverage in options and futures because you know from a past cycle that's recurring exactly how far they might be running, if it's a big move, what the point count might be the first couple of days, and so you can emphasize using a lot more leverage. But in this video I wanted to emphasize basic skills to get you to the point where you're trading and making money every day. And most of the time, you're just trying to make 1 or 2% every day waiting for the big move. And the 4 or 5 times a year where the really big moves occur that last 2 or 3 weeks and the broad averages go 10% or more, that really falls under the time cycle concept. But in basic time cycles, the market repeats on a 1-day interval, a 4-day interval, a 15-day interval, and 30. I also throw in 27 and a third, which is a lunar cycle. But 27 to 30 days it repeats. 90 days is a common thread. And usually tops in a short-term market will come at 120-day intervals. So those are the daily ones to keep in mind. So if you've gone that far in a move from a major high or low, you can expect a possible reversal. On the annual cycles, average bull and bear markets go either a year or a year and a quarter. If they make it past that, they'll go a full 2 years, occasionally 2.5. Past that, they'll go 5 years, 7 years, 10 years. And the predominant long-term cycles that repeat over and over again are the 20-year, the 60-year, and the 100-year cycles. So these are used at the beginning of every year in January to get a rough outlook of where we've come from, what's expected for this year. Maybe you could look back 10, 20, 60, 100 years from this year's date, see if there's some anniversary patterns that appear to be repeating. The Fibonacci numbers, add each number to its neighbor to get the next number. This is a series that's beaten to death a lot with the Elliott wave guys. Occasionally I use it, but remember, these are the golden ratio. If you divide each number by its preceding one, you'll get a 1.618. And these are things that approximate the 1.618 ratio. They are not exact. You can take any two numbers like 100 and 700 and add them together to get 800, and then add 800 and 700 and get the next one, and they will approximate 1.618, but the early phases of that will not be 1.618 ratios. But many people do prefer to count the bars, and usually on reversals on an hourly chart, for example, if they go past 3 bars, they will go 8 bars. If they go past 5 bars, if they go past 5 bars, they will go as long as 8 bars. If they go past that, 13 bars. So sometimes I'll use these counts on a hourly chart. Your best reversals come when you've had a nice straight line move of 21 to 34 bars on an hourly chart, and then you see your reversal signal bar with the low of the high bar, high of the low bar signal, and then you go long, and then you can expect probably a 5 or 8 or 13 bar counter trend move. The other technique in time cycles is really the concept of square outs and projections.